Okay, today we're going to talk about one of my favorite topics, which is all about how I make income in my 401k from the humble covered call. So, the covered call is really my favorite trade, and it's so simple, it's so easy, anyone can do it. That's why I love it so much. It's also just it provides a solid income base. So, like if you own shares, you can sell calls, you can participate in the stock market, you can pull premium from the stock market. I just think it's like a marvel of something that's available to us via the financial markets. So, like I have this really great strategy that I do in my 401k. My husband and I both love it. We both have our own self-directed 401k account. So that's going to be very important for you, okay? So you can only do this if you have a self-directed 401k. You can also do this if you have an IRA or a Roth or something like that. But if you have like a company 401k or you're in a pension fund or something like that, you probably don't have access to sell covered calls, and you're probably invested in shares that they probably put you in. So my condolences if this is not available to you, but if it is available to you, have a look, see what I'm doing, see if you like it. So my account size is approximately 500K. My account is self-directed. Again, this is why I can do this. I have a solo 401k, so I'm self-employed, and I had made deposits in my 401k like through the company that I worked for and that I owned, okay? I, interestingly enough, have not deposited funds into my 401k for, say, the last 2-3 years. I used to make contributions and max it out. I don't do that anymore. I'm not saying anyone else shouldn't do that anymore, but I've just kind of come to the conclusion that at this point in my life, cash in my hand right now, at my age, is better for me than and putting in my brokerage account where I can trade more kinds of options on it because I'm kind of good at this, than putting it in my 401k. That's my personal decision. It is not financial advice. But what's impressive about this is how I've been able to grow the account without making contributions. And if I wasn't able to grow the account without making contributions via covered call, I would be depositing. See how that works? Okay. So this is like my replacement way to get income into my account without having to work for the money and put the money in there that way. Now I'm just taking money from the market and getting the market to create my deposits for me. So in the last 6 months, I just looked this all up because I track all my trades, guys. I made $38,186 in premiums, cover call premiums. There were some dividends in there because the dividend paying stocks I do add into my income and I use to buy other shares, which is going to be a big part of the system. So also, just for comparison's sake, the maximum 401k contribution I could make as an employee to my account in 2025 is $23,500. So if I were just to take money that I've earned and put it into my 401k, I'd be maxed out on $23,500. That's all I can do. I can't even put any more in there than that and like not get the tax benefit of it. Because that's usually why people also deposit to a 401k, is it reduces their taxable income. But look at me, I'm making $38,186 without putting any money in at all. That is kind of just bonkers. And I love it. So I also just want to show you like what my goal is with really my 401k in general. So I love a good stock pick, right? You know that? And I'm really specific about my stock picks as well. And here I do like to invest in some more conservative things like MasterCard and JP Morgan Chase and things like that I don't tend to options trade with, okay? I do not options trade those. But my goal with my 401k is to beat SPY. Like that's always like my ego would be hurt if I couldn't beat SPY. But I beat SPY every year that I've been managing my 401k myself. I used to have a manager for it many years ago, but I switched over to managing it myself and making my own stock picks. Unfortunately, I don't have a year history of this account, and because I had to close it down and start a new one in August. So what you're seeing now is August 24th to May 5th, 2025. And I'm just beating SPY. Okay. So I'm like 20% return for that point in time. Not so bad considering that we are in a major pullback because of the tariffs, those stupid tariffs. Anyway, my goal is to beat SPY. I'm doing that. And that makes me very happy. Okay, so moving on today's agenda, I'm going to show you the stocks that I'm buying and holding inside my 401k. I'm going to show you my 401k covered call system, which I think is pretty clever. And then I'm going to show you just how this compounds the growth of this account and adds to my wealth that I'm going to have to buy champagne when I retire. Okay. My husband and I often joke. And when whoever has a better month, we're like, okay, well, you're buying the champagne now in retirement. It's sort of funny. We like champagne. Okay, so the stocks I'm buying and holding, I hold shares in really rock solid companies like Costco, Amazon, Apple, JP Morgan Chase, Nvidia, MasterCard's in there too. I even think I have some Chipotle Mexican Grill just to mix it up a little bit. So these companies are stable, uptrending, and have long-term growth potential. They're excellent for holding to generate capital gains over time, and they can and they also help me collect a certain baseline premium without a whole lot of downside risk. Okay, I accumulate multiple lots of 100 of these tickers inside my 401k. Yes, I have multiple lots of Costco in that 500k. I've got 200 and some odd shares, and I intend to keep at least half of those shares that I've accumulated for a very long time, unless something fundamentally changes in those stocks. So again, I think a lot of people here know that what I do is I read Yahoo Finance every day for 10 minutes because I'm a trader. But if I didn't and I had individual shares in my brokerage account, I for sure would check those earnings, because I think you have no business owning individual stocks in large proportions in your 401k unless you read their earnings report so you know which way the stock is trending, which way the market's trending. That's my opinion. Follow it or don't follow it, it's up to you. But I read how these companies are doing. If I start to hear, oh, there's something really bad happening with JP Morgan Chase and it doesn't look like business is improving in banking or something like that, I'll just sell and move on to something else. No big deal. All right, so why do I do this? Why do I accumulate like multiple lots of shares? Like, why do I have 400 Amazon shares and not like 100 at Amazon and then like 100 of something else and then something else? Well, the reason why is because I sell covered calls on those stocks and I want their long-term appreciation, okay? And I'm selling covered calls on some of the lots of the shares and not all of them, okay? So I want you to make sure that you know that like I'm not gambling on having in these individual shares at all. I am choosing quality companies. And when I'm selling these covered calls, I'm being paid to own what I already want to own long term. So if you're not sort of taking advantage of the covered call, I kind of like question why you wouldn't. Some people would say because it'll cap your upside. And we're going to get to that in a minute and just how I manage that risk. Okay. So here it is. I only sell calls on half of my positions to keep the upside open. Okay. So if I have covered calls sold on Amazon, if I have 400 shares, I'm going to sell covered calls on half of them, on 200 shares, and I'm going to keep the other 200 free and clear of anything. So that if the stock rockets off, I get those big gains on at least half of my shares. Okay. I've done it before where I've tried to sell covered calls on everything, and that will end in tears. You'll be disappointed. You'll get FOMO. Someday it'll just like the stock will rocket off and you'll be like, oh my God, I just cost myself money. So that's why I don't do it on everything. Okay. Okay. So I sell calls with anywhere from a 20 to 40 delta on half of my shares. The 20 to 40 delta range also gives me the ability to collect capital gains when the shares do get called from me. So every single time I'm selling a covered call, I'm getting covered call premium plus capital gains, okay? And I know that one of the criticisms is with selling covered calls, again, is that you're capping your upside. But the other good thing about it is that you're also taking capital gains in chunks and pieces as you go along. So I've done this a long time, and for every negative thing that happens, there's always a positive thing that comes out of that too, because stocks often go on sale. There's a whole thing that you guys know happens. Stocks go up, they go down, they stay the same. We can move within those parameters. So Again, this lets me collect decent premium and keep the upside if the stock runs and at least half of my shares. If the stock rips up to the upside, I still participate in that upside. And if it trades sideways, oh God, that's beautiful, because I still collect cash from the other half. So like if the stock just stays sideways for 6 months at a time and just goes like this, right? At least I'm selling covered calls on half of those shares so that I'm getting income from something that's just sitting there. Then you don't get FOMO that you could have bought a stock that's performing better than the one you got. Because it will tell you one thing about all these quality stock picks is that oftentimes they will have 5 years of just a massive runoff and you'll be like, oh my God, I've been so lucky that I held Microsoft during this time. We got a 200% return. That literally happened in Microsoft in the last 5 years. Okay, this year it's super flat. There's nothing wrong with Microsoft though. What ends up happening is that stocks go on a tear for like 4 or 5 years and then they just have to take a break and cool off. They just do. That's what a normal chart does. So when they're cooling off, wouldn't you rather collect premium and dividends from that stock? Because I would. Okay. But basically, this is a barbell strategy. We've got one side that's making a stock appreciation. We've got the other side for income. And together, they are a killer combo. Don't forget that on the side where we are creating the premium income, we're also getting cap gains. Just not as much as when the stock rips. Okay? That's the only downside to that. So the other part of what I do is I do something that you guys are going to be like, wait, Erica, this goes against almost everything that you always say about holding quality stocks, which is I hold some speculative stocks. What do I do? Okay. I take about 10% of the account and I use that 10% of the account, which is about $50,000 in value right now. And I hold ASTS and Ionic shares. And I buy lots of 100 and I sell covered calls on them that are aggressive. I don't care about the delta. I'll sell that call right at the money to get the most amount of premium that I can. And I just generate monthly income off of these shares. Okay. I chose these stocks because they're high premium and they trade also within this range that makes them perfect for a covered call. They're also cheap. So I can amass more lots of 100 shares easily. Okay, so ASTS right now it's trading at $24.41. That was today. This stock, like when it's having a real down day, it's like $21. When it's having like an up day, it's like $34. But that has happened so rarely. Also rolling this stock in and out is super juicy, like on the premiums. Like the premium options chains are almost weird looking because they don't make a lot of sense. There's not a whole lot of volume there, but there's enough volume to get a fill and they're weird looking. I promise you when you go and look at these options chains, if you want to do some research on this, like a 26 strike price might pay less than a 24. And you're like, what is, or more than a 24. And you're going, what is going on here? It doesn't make any sense. So it's kind of interesting to sort of play with these options chains with ASTS, but I'm really loving trading this one because rolling up and out and in and down is like so easy with this stock. The same is true with Ionic. So these are just stocks that I found that meet certain metrics, and I'm going to tell you about those in a second. But this one is also kind of like on a down day is sort of like in the $22 range, and on an up day it can go as high as maybe like 38. But it hasn't been there in a while since the sell-off. It's having a harder time retracing than sort of like ASTS is right now. So anyway, when I sell covered calls on these, I don't care if my shares get called away from me because even if they get called away at like $26, I know there's probably like another day coming around the corner where I can pick those shares up again for like 22 or 24. So I've just been doing this for a while now, like, I don't know, 4 or 5 months, and it's worked out really beautifully. In the past, I've had other stocks that I've used for this. And again, it works really well. So what I'm looking for here is high premiums. The other thing that I was looking for in these stock picks is that they are new companies that have something really new that could really take off. So it's sort of speculative, but it's also to the point where I feel like they are solid investments anyway if I was going to be speculative, which I am being speculative. I'm not in this for the growth of the company. Like I am just selling covered calls for income. However, I do think they have a really, really good shot at growing, which is why I'm doing this, okay? Because I don't want the stock to drop on me too much. I don't want these to go to like 15 bucks. That would kind of suck, okay? So ASTS, what are they? They are a provider of Cell phone service through satellites. So instead of having cell phone towers, what they hope to do is have our cell phone connections go through a satellite connection, which would be super amazing because we wouldn't have anywhere on Earth where you couldn't be reachable by cell phone. That's a bad thing if you want to escape to your cabin for the weekend and go camping and like not have anyone bother you, because you're going to be botherable in 5 to 10 years when this company takes over, if they do. But it's a good thing if you're in the Sahara and you don't have any water and you need to call somebody in Antarctica to bring you an iceberg to eat. So that's the way I look at that. But literally, that's the possibility with this company, which is pretty cool. And I think it does have a lot of potential. They know that the technology, just to give you an idea of like where this company is and their thing, they know that the technology has worked. They proved it, but they're not really selling to those big cell phone providers yet, like Sprint or AT&T. They're just not there yet. They haven't secured those contracts. That'll probably be coming down the road if everything works out, okay? And then Ionic, they are in supercomputing. So remember how all these stocks in AI did really good in like the last 2 years, sort of more in 2024 than this year. Been a little bit of a stall, but after AI, the next computing boom is supposed to be apparently in supercomputing. And Ionic is one of the larger names in supercomputing right now. So I don't know, there could be growth here as well. Okay, so that's kind of why I chose those. Like, I guess my point is here in mentioning all this is that like, I wouldn't necessarily choose a company that was high premium and didn't really have the idea of like it potentially having a super amazing future in front of it potentially. That's the point. Okay, so you want to make sure that these have, your stock picks here would have like a really great future ahead of them, most likely. All right. So anyway, I rotate in and out of these cheap, high premium stocks by selling short dated covered calls, collecting 275 to 400 a month, literally, on each lot of 100 shares. And when the stock goes up, I'll like roll up and out. When it goes down, I roll in. If I can't roll out and keep the shares, I don't care. I just let them go. Again, I just let them go. But every roll or call that I make brings in hundreds of premium into my account. So like right now we are in May 6th. I have calls that are expiring going into the first week of June right now. So I will just keep like rolling up, rolling out, and time is my friend. Why is time my friend? Because this is all like stuff that's going to happen. Like I'm using this money when I retire. So like rolling out for a 2-month period of time, no big deal on these plays. Makes sense? All right, cool. So how I compound this growth, okay? So I take in all of these premiums, like $200 to $400, $275 to $400 a month per lot of 100, and I use those premiums to then buy more shares of those quality stocks like the Apples, the Costcos, the Amazons, the MasterCards, right? Or I buy more of those high premium stocks like Ionic and ASTS. This helps me scale up the system month after month, and each month I evaluate which shares give me the best return on premium or which quality stocks I should buy. And this is another thing you're going to hear me say now that you've never heard me say before. When I decide which stock I'm going to buy on the high quality stocks, I choose the stock that looks on sale to me. Because why wouldn't I? Because I am trying to get a deal on those. I'm trying to get a deal on those shares so that like I can have a higher return many years from now. I don't really do that when I just do that in my options account. I don't really care if a stock is more on sale right now versus what it was 2 weeks ago. It doesn't enter my mind, and nor should it. But with this, I do. I look for sales. This is one situation where I love to buy a stock on sale. Okay. Every month too, I'm adding like another lot of those 100 of the ASTS or the Ionic now, because I just have enough premium income coming in where if I'm making like about 5K, I can like take 2,500 and buy quality stocks and take 2,500 and buy another lot of 100 of those premium earning stocks. Okay. So the more stocks that I own, the more covered calls I can sell, and it's a compounding machine. Every premium brings me closer to my next income generating block, and I just get one new block every month. So I'm going to show you like kind of how this is adding up over time and the account growth in premium that I'm getting in the last 6 months. So this year in 2025, in January, I took in 6,400. That was awesome. February was 5,200. March, 5,300. April, 8,600. Banger month in April. Strange, right? Because April was down. So what I started to notice in February and March is that we were hitting like sort of all-time highs. And so I just kind of traded a little bit lighter then. And then April, I did have more after the sell-off. I was like, it's going to take a while for us to retrace for this. So I was a little bit more aggressive with selling those calls. December was a good month with last year. So I'm going to go into the last 2 months of 2024. I'd made 6,400, November 5,900. But my notes show me, again, like how do I know this is compounding and getting bigger and bigger over time? Is that my notes show me that mid-2024 and the beginning of 2024, I was making more like the 4,000. Sorry guys, I missed a zero here. 4,000 to 4,300 a month. At the end of the year, it started to go up into the 5,000s. Now 5,000 is a low month and the 6,900s and the 8,000s are happening. So this will just like kind of keep growing like this, which is beautiful. It's a beautiful thing. Okay, and then annualize. Let's just take a moment and fantasize about that. So the last 6 months income was 38,186. My projection for a year then, just by taking the 38K and doubling it, is 76,372. So the future is bright here, guys. Like I'm liking this. Like there's a lot of people right now who think that they could probably retire on a $76,000 income. Not me, but there are people that can. Again, I like champagne. So anyway, it's something to think about. My husband also brings in a similar amount in his 401k. So this is just amazing. And I can keep doing this when I'm retired. That's what's so cool about it, because like, even if I'm really just, not even able to do anything physically when I'm older, or like potentially, let's say I'm older and I'm ill, I can still do covered calls. Like it's so amazing. This is such a gift in my life. So anyway, if like, again, I wanted to share this. I shared this on X. It kind of blew up on X. So I was like, I should make this into a video and even explain it more. I'm so glad I did. And so if you want to learn anything more about trading options and you want my help on how to learn how to sell the covered call, that's super easy. You guys can learn that in like a couple hours. It's a really great skill to have. But if you want to go into advanced options strategy, there's a link below in this description. Book a meeting with me. I'm so happy to talk to you about that and like improve your financial future. Or if you want to watch another video about the full process of how my client AJ made 100K in 96 days trading options in his portfolio. And he started really from not knowing a whole lot, guys. Like he started from scratch and learned. And then the next month was trading and then made 100K in 96 days. Then click the video that's on the screen right now. Hope to see you around again soon.